To understand why Energy Fuels is becoming a crucial company, it's important to point out it's a U.S. uranium producer that also engages in rare earth element, REE, production and recycling. Its primary product is natural uranium concentrate, which is sold to customers for further processing into fuel for nuclear reactors. After outlining what rare earths are, we'll go over Energy Fuels' uranium operations and its business with other elements. Then, we'll go over how current and future geopolitical factors could drive this increasingly vital business towards explosive growth. Rare earth elements are a group of 17 chemical elements used in clean energy and advanced technologies like wind turbines, electric vehicles, advanced robotics, and defense applications. Monazite, a mineral rich in rare earths, also contains significant recoverable quantities of uranium, which can fuel nuclear power plants. Rare earths are also commonly used to produce permanent magnets, catalysts, ceramics, pigments, glass polishing, metallurgy, and phosphors. The global rare earth elements market as a whole is expected to grow with a projected market size of $6.28 billion by 2030, growing at a CAGR of 8.6% from 2025 to 2030. The Asia-Pacific region dominates the market, with China accounting for over 70% of global production and processing nearly 90% of the world's rare earths. Energy Fuels generates revenue from extracting and processing uranium-bearing materials, purchasing and toll processing materials for others, and recycling uranium-bearing materials. It operates the White Mesa Mill in Utah, the only conventional uranium mill and uranium, vanadium, and REE recovery facility in the U.S. The mill has a licensed capacity to produce over 8 million pounds of U3O8 per year and can recover REEs and vanadium from various uranium ores. Energy Fuels has also completed modifications to its infrastructure at the mill to produce upwards of 800 to 1,000 metric tons of separated NdPr per year from monazite. Energy Fuels expects to ramp up uranium production to 630 to 880,000 pounds of U3O8 sales in 2026. Energy Fuels has also secured long-term contracts with major U.S. utilities and is preparing to increase uranium production to a run rate of approximately 1.1 to 1.4 million pounds per year. REE production capabilities are being advanced with plans to expand NdPr production capacity to between 4,000 to 6,000 tons per year, enough to support up to 6 million electric vehicles annually. Energy Fuels believes its REE initiatives will enable it to capitalize on the growing demand for rare earth elements in advanced technologies, including electric vehicles and wind turbines. To help make this ambition a reality, Energy Fuels acquired Base Resources, which owns the Toliara project in Madagascar, a world-class critical mineral project with large quantities of rare earth, titanium, and zirconium minerals. In the U.S., Energy Fuels operates several conventional uranium properties like the White Mesa Mill in Utah, a 2,000-ton per day processing facility for uranium, vanadium, and rare earth elements. Other key properties include the Pinyon Plain Project, LaSalle Complex, Whirlwind Project, Roca Honda Project, Sheep Mountain Project, Bullfrog Project, and Watt Project. Energy Fuels also conducts in-situ recovery, ISR activities through its Nichols Ranch project in northeast Wyoming, which includes a licensed and operating ISR processing facility and well fields. The Nichols Ranch project has been on standby, but the company is undertaking exploration and development activities to expand resources and prepare for potential recommencement of production. In addition to uranium production, Energy Fuels is exploring opportunities to recover medical isotopes such as radium-226 and radium-228 from its existing uranium process streams. These isotopes are critical components in the development of targeted alpha therapies for cancer treatment. Energy Fuels has received regulatory approval for the concentration of R&D quantities of radium-226 and is currently completing test work and engineering on its R&D pilot facility. To further its plans for development and production of medical isotopes used in cancer treatments, Energy Fuels acquired RadTran, a private company specializing in the separation of critical radioisotopes, in August 2024. The acquisition is expected to significantly enhance Energy Fuels' planned capabilities to address the global shortage of these essential isotopes. On the topic of heavy mineral sands, HMS, which contain titanium minerals, zircon, and monazite. These minerals are used in various industrial and consumer goods, and demand is linked to global GDP growth and the green energy transition. Several HMS projects have been acquired, including the Toliara project in Madagascar, the Donald project in Australia, and the Bahia project in Brazil, each of which is believed to hold significant quantities of HMS, including monazite. The Toliara project is in the permitting and development phase as formalization of fiscal terms with the government of Madagascar is in progress, along with progress towards a final investment decision, FID. The Donald project is also in the permitting and development phase, with the company funding a pre-FID budget to move the project forward. Energy Fuels Kwale project in Kenya ceased production at the end of 2024 and is currently in reclamation. The company is also involved in mineral exploration, with plans to restart drilling at the Bahia project and explore other properties. Now, to understand the importance of Energy Fuels in the big picture, we need to go over the use for its products and how they affect and are affected by geopolitics. For instance, the primary use of uranium is to fuel nuclear power plants for the generation of carbon and emission-free electricity. According to the World Nuclear Association, there were 440 operable nuclear reactors worldwide as of January 2025, requiring approximately 175.5 million pounds of U3O8 annually at full operation. Energy Fuels believes that nuclear energy is essential to the global economy and addressing climate change, providing reliable and affordable electricity while generating lower life cycle carbon emissions than other baseload energy sources. It also believes that certain uranium supply and demand fundamentals point to higher sustained uranium prices in the future, including significant production cuts, increased demand from utilities, financial entities, traders, and producers, and a growing trend away from Russian-sourced nuclear fuel supply. The U.S. has banned the import of Russian uranium products, subject to waivers in certain circumstances. A large degree of uncertainty exists in the market, primarily due to trade issues, the life of existing uranium mines, uncertainty on the timing and success of new mine commissioning, conversion and enrichment bottlenecks, and geopolitical risks. Energy Fuels believes that the current and long-term fundamentals of the uranium industry remain positive due to growing demand for clean, carbon-free electricity, depletion of existing uranium mines and inventories, and geopolitical events. Despite a modest drop in uranium spot prices in 2024, the company expects prices to rise to higher levels to support additional primary production required to meet increasing demand. Driven by significantly more interest in both spot transactions and long-term contracts for U3O8 from utilities, driven by global clean energy goals, new demand for electricity from the technology sector, and trade restrictions. Energy Fuels' marketing strategy is to seek a base of earnings and cash flow through sales of a portion of its uranium into term contracts, while gaining exposure to increasing uranium prices through contracts with market-related formulas and future spot and term sales. The company has entered into 4 long-term uranium sales contracts with U.S. nuclear utilities, with remaining base deliver quantities of 2.8 million pounds and deliveries to occur during the 2025 to 2030 time period. Energy Fuels' uranium inventories and expected production in 2025 and subsequent years are expected to provide the company with flexibility to complete spot sales in response to improved market conditions. In terms of the vanadium market, Energy Fuels notes the main drivers of V2O5 prices are demand for steel, including global prospects for economic growth, construction, infrastructure, and auto manufacturing. That's why V2O5 prices are expected to increase once confidence in the Chinese and global economy returns. Energy Fuels plans to continue selling vanadium from its inventory into rising markets and maintaining its inventory for future sales at opportune times. In the heavy mineral sands market, ilmenite and rutile are primarily used as feedstock for the production of TiO2 pigment. The company believes that longer-term fundamentals for rutile and ilmenite are positive, driven by growing demand for pigment and new projects entering the market. Zircon demand growth is closely linked to growth in global construction and increasing urbanization in the developing world. Energy Fuels highlights how the global ferroalloys industry has been affected by factors including weak downstream steel demand in China, raw material supply disruptions, and geopolitical tensions. Despite subdued conditions, most Chinese pigment producers continue to operate at high rates, and demand for ilmenite remains firm, suggesting longer-term fundamentals for zircon are positive, driven by recoveries in demand for ceramics in housing and building, as well as growth in industrial manufacturing. Then when it comes to monazite, it's a rare earth element-bearing mineral that's rich in magnetic rare earths like neodymium, praseodymium, terbium, and dysprosium, making it crucial for green technologies, including electric vehicles and wind turbines. The mineral also contains uranium and thorium, which can be used for nuclear power and medical isotope production. Most monazite is currently produced from mineral sands and shipped to China for processing. The monazite market had nearly disappeared between the late 1990s and 2020 due to its radioactive content, but with the growing demand for clean energy technologies, producers have started to recognize its value. Companies like Energy Fuels, Lynas, and the Saskatchewan Research Council are now processing monazite for rare earths outside of China. Monazite prices typically follow the rare earth oxide market, peaking in 2022 and trending downward before recovering in line with the rare earth oxide market since June 2024. The rare earth magnet market is expected to see significant growth through 2040, driven by increasing demand for neodymium iron boron magnets in robotics, advanced air mobility, and electric vehicles. According to Adamas Intelligence, demand for didymium, dysprosium, and terbium is projected to grow at a compound annual growth rate, CAGR, of 8.7%, while global production will rise at a slower rate of 5.1%, potentially leading to supply constraints. Energy Fuels also successfully modified its infrastructure to produce separated neodymium praseodymium and plans to further enhance its production capabilities. It expects to secure monazite sources capable of producing up to approximately 4,500 tons per year of separated neodymium praseodymium as it aims to restore the rare earth supply chain in the U.S. Then, although Energy Fuels still needs to compete for acquiring attractive properties and advancing its projects, it does have an edge with its diversified business opportunities, including uranium production, REE carbonate recovery, vanadium recovery, and potential radioisotope recovery for medical treatments. To deal with advantages that larger companies have, including Chinese ones, Energy Fuels can form alliances to enhance U.S. domestic rare earth and critical mineral supply chains. For example, their partnership with Chemours leverages the company's complementary strengths, with Energy Fuels developing heavy mineral sands projects in Madagascar, Brazil, and Australia, and Chemours mining and separating heavy mineral sands in Florida and Georgia. The alliance aims to reduce U.S. dependency on foreign mineral sources, particularly China, and strengthen America's industrial base. According to Damien Gumpel, president of Chemours Titanium Technologies, Chemours is proud to play a role in strengthening U.S. critical and rare earth mineral supply. Energy Fuels president and CEO Mark Chalmers noted that the companies have collaborated successfully over the past 4 years and look forward to expanding their relationship. The partnership has received support from prominent figures, including Rich Nolan, president and CEO of the National Mining Association, Senator John Curtis, and Representative Kat Kamak. They emphasize the importance of securing domestic supply chains for critical minerals to ensure America's economic and national security. Then, with its own domestic mines, Energy Fuels' Pinyon Plain uranium mine in Arizona continues to outperform expectations. The mine's high uranium grades averaged 3.51% U3O8 in June and 2.23% U3O8 in Q2, significantly exceeding previous estimates. According to Mark S. Chalmers, president and CEO, Pinyon Plain is likely to be one of the highest-grade uranium deposits mined in U.S. history, with potential for additional exploration and discovery. The company expects to sell increasing levels of uranium over the next few quarters, including 140,000 pounds of U3O8 in Q3 and 160,000 pounds in Q4 under existing long-term contracts. In 2026, Energy Fuels anticipates selling between 620 and 880,000 pounds of U3O8 under existing contracts. In addition to uranium production, Energy Fuels has started producing heavy rare earth element oxides at pilot scale at its White Mesa mill in Utah. It successfully produced its first kilogram of dysprosium there, achieving a purity of 99.9%, exceeding the commercial specification of 99.5%. The company plans to produce approximately 15 kilograms of dysprosium oxide during the pilot scale phase before shifting to terbium oxide production, targeting the fourth quarter of 2025. Energy Fuels intends to construct commercial-scale dysprosium, terbium, and potentially other heavy rare earth element separation capacity at the White Mesa mill, which could begin commercial scale in the fourth quarter of 2026. The dysprosium oxide is being produced from monazite mined in Florida and Georgia, and multiple magnet manufacturers and original equipment manufacturers have expressed interest in obtaining samples for validation processes. This progress builds on the company previously completing a commercial-scale light rare earth oxide circuit at the mill, producing neodymium-praseodymium oxide used in permanent magnets. It also has several projects underway, including the Donald Project in Australia, which could begin production by Q4 2027, and the Toliara Project in Madagascar and Bahia Project in Brazil, targeted for production in 2028 and 2029 respectively. Other progress is set to come from Energy Fuels and Vulcan Elements plans to create a domestic supply chain for rare earth magnets independent of China. Energy Fuels will supply high-purity light and heavy separated rare earth oxides, including neodymium, praseodymium, and dysprosium oxides, to Vulcan in the fourth quarter of 2025 for validation. If successful, the companies plan to negotiate long-term supply agreements. The rare earth oxides will be sourced from U.S. mines, with Energy Fuels processing monazite mineral concentrates at its White Mesa mill in Utah. This facility is the only operating U.S. facility capable of such processing. Energy Fuels has already produced commercial-scale high-purity neodymium praseodymium oxide and is currently piloting production of heavy rare earth oxides. Vulcan Elements operates a commercial manufacturing facility in Durham, North Carolina, producing rare earth magnets for defense and commercial applications. The partnership aims to establish a secure Western rare earth magnet supply chain, reducing reliance on China. For more on Energy Fuels and other companies, follow Ascencore. Thanks for watching and have a nice day.